Welcome back to the Dividend Diplomat YouTube channel. You got your boys here, Lanny Bert, the Dividend Diplomat. Guys, I made a major portfolio move today. I sold two stocks,
Really
put some
did.
money into one new position in my portfolio. Guys, I'm trying to juice up that income. I'm trying to reach financial freedom faster. So, can't wait to break down what I did.
Guys, make sure to smash that subscribe button. Give this video a nice thumbs up. We are the Dividend Diplomats, guys, and Bert made some dividend stock moves. We're very transparent here on the channel, guys. It's all about producing more passive income, more dividend income. And Bert sold two stocks actually. Whoops, that actually produces $0 in dividend income. And he is adding at least $21 in forward income, potentially close to 70 with just this move.
All right, everybody. So let's start.
Dang,
Let's start with the sales first. Two positions, both under
dude.
$1,000 that I just got tired of looking at in my traditional portfolio. I've had them for a while. Lanny cut one of them, and it finally looked at them and said, "I am ready. I don't want them anymore. Let's move them into something
Help
I
me.
want." I mean, it's what it was. It was the decision was made on what was it, Wednesday, when the market was falling, interest rates were soaring. I opened up my brokerage account, Lanny. I was looking for where do I want to put some money? What are some stocks I want to buy? And I saw these two companies. I just got pissed off and I said, I am not putting any money in there. That night, I made the decision to do this. For that first stock to sell, Lanny, Intel, ticker symbol INTC. I have two Intel positions, everybody. 32 shares in my account, 100 shares in my wife's account that we write options on. This is not the 100 shares. This is my Bert's traditional taxable account. We sold our 32 shares, so we got $750 in cash back, a loss of $374, or we 33% on the position. Yeah, so we'll get some tax savings from it too. But the big thing was picking up that $750 in cash and eventually moving it into stock that actually pays a dividend because Intel doesn't anymore.
Yeah, if you guys remember Intel, first they cut it and then they quote unquote suspended it. They haven't paid a dividend in quite some time now, a couple of years, as they are trying to reinvigorate themselves. Intel's gone through some turmoil, going up to $50 a share, down to 18, 17, $18 a share. They've kind of hovered around 19 to 21, $22 a share. I think they've had one spike that was probably promising this year, probably a better exit point. But Bert, you didn't have that many shares and you exited.
No, and I still have the 100 shares in my wife's position too. So we're not out of the Intel game altogether. I'm out of this small position that I was never going to keep building up. So it's time to get it out, move it along.
Yep. So you got $750. What was your realized capital long-term loss?
$374 there. So we'll pick up some of
Nice.
these tax savings. I'm going to find a stock that has some gains that I want to offset it with, and we'll
Let's
see.
hope you get one. Yeah,
Yeah.
let's hope you get one.
So stock number two,
Capital
though.
one.
Yeah, stock number two, Warner Brothers Discovery, ticker symbol WBD. I had a leftover position in my portfolio. It was only about $437. This one, because of how it was split off from AT&T, Fidelity allocated a huge cost basis to my Warner Brothers Discovery position. So I had a $1,065 loss for Warner Brothers Discovery on paper. I don't know if that's actually what it was, but for tax reporting, I'm not going to complain because it's a huge benefit, Lanny, for a potential long-term capital loss right there.
Yeah, I mean $1,000 loss to go with that $375 loss with Intel. You're looking at $1,440 of losses. That's about $500 in tax savings
Yeah,
overall, almost there. I mean,
huge.
just look at it about like a third. Yeah, it's pretty solid.
Yeah. So the move wasn't though just to sell and let the cash sit on the sideline. I had a stock in mind that I wanted to buy. I have a
Oh,
position that I want to build. I have a position that I eventually want to get to at least $4,000 to $5,000, Lanny, by investing cash, selling stocks, and moving funds into it. So I took the $1,200 from this transaction, Lanny, added in more to it, and guess what I got, Lanny? I bought Paccar, ticker symbol
cool.
PCAR.
CAR.
You have been talking about Paccar for the longest time, Lanny. And you know what? It's a fantastic stock, and we're going to break down the metrics in a bit. The Peterbilt owner, the Paccar owner, and what is the third one? Is it Dart?
Kenworth, man,
Oh, Kenworth.
Kenworth.
Yeah, the big car, the big logistics.
Big
It's
semi trucks, guys.
Yeah, it was finally the time where I said, screw it, I want to buy it. Down 9% year to date, down 12% over the last 52 weeks. So this is a good opportunity to catch them in the low 90s. I got them around $94 per share.
Wow. Wow. There you go. So you moved $1,508 into Paccar. Man, a $50 billion company, a company that pays you a dividend. So you already are in a net positive of passive income. I like it.
Yeah.
Again, I understand how painful it is to keep watching these losers lose, like
Yeah.
WB, BD and INTC. So
Yeah, it's a position I'm excited to build. They have 7 billion in quarterly revenue, about a dollar per earnings per share. They're growing. They're growing in Canada. They're growing in Europe. Their businesses. The interesting thing though, why they came down, like so many companies, they're dealing with the impact of tariffs. They're trying to figure out with the uncertainty. They put out guidance in their last earnings release that shows what's going to happen between gross margins because there are going to be tariffs and costs associated with this. So I think it's gross margin between 13 to 14%. But there's also the caveat of that could easily be higher if the impact of tariffs are lesser, but no one's going to really know until the final details shake out. So one way or another, stuff still has to get transported, engines still have to get made for these trucks, and they can still benefit with tariffs, whether they're high, low, no, gone, whatever it is, they're in a position to succeed.
wow. Well, we're going to have to look at the metrics here for Paccar. We're going to run through the DD stock screener, the PE ratio, the payout ratio, dividend growth. So they are trading at 94.33. You did pick them up right around that anyways.
Yeah.
And, PE is about 16 times earnings, which not overvalued. Signs of undervaluation to me, Bert.
Yeah, absolutely. Their dividend is $1.32. That's a payout ratio of 22.8%. They have some nice dividend growth, Lanny. We'll come back to the dividend in a second. 5 year dividend growth rate's 8.11%. They've increased it for 16 years when you look back at the history. And they just announced a 10% dividend increase.
10% banger, baby. But guys, the stock is up over 105% in the last 5 years, 50 billion in market cap. The one special thing about Paccar, of why Bert also may have bought Paccar. Bert, what's so special about Paccar and their specialness to their dividend?
They pay a special dividend. That's exactly what it is.
Wow.
Every Q4, they pay a nice special dividend. This last year, Lanny, was $3 per share. So with that $3 dividend plus their $1.32, that gives you an adjusted yield of 4.58%. So
Wow.
yeah, so if the regular,
Obviously, yeah, go ahead, Bert.
I would say with my position, I have 16 shares now. The regular dividend, it's $21 per year as of today. If they match it with that special dividend, Lanny, $69 of annual dividend income.
Huge, 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 guys. I
Yeah.
mean, no matter what, he's adding passive income. And if somehow Paccar is that generous and does a $3 special dividend, you're looking at a huge yield of over 4.5%. But even if it's like half, even if it's only like a $1.50 special dividend, Bert, your dividend is going to be more than likely higher than the 21. You'll probably be somewhere in that $40 to $70 total dividend income impact range.
And it's better than that zero
Goose egg.
getting from Warner Brothers and Intel.
Congrats. First, you got out of two duds, and hopefully Paccar, is here to take control of that position, take the baton, clean it up, turn that something sideways and stick it straight up Intel and Warner Brothers candy.
Yeah, you know it, everyone. So let me know, what do you think of this move? What would you have done if you were me? Would you have sold Intel? Would you have sold Warner Brothers? And would you have invested the proceeds and some cash into Paccar like I did? Let me know in that comment section below.
Guys, if you haven't already, smash that subscribe button. It's so easy to give this video a thumbs up for your favorite dividend investors out here. Because, guys, you're either with us or you're against us. Jack, that was Bert the Hurt and Lanny from the Dividend Diplomats. Over and out.